Hey, everyone, stick with us versus herd. If it's your first time here, like the content, whoa, hit subscribe. If you want to get notifications when we go live, tap the bell. And if you want to join the UVH fam, our community, links are below in the description to our Discord and our options trading group on Facebook. If you're here right now, say what up. What's going on? How we doing? All messed up over here. We're all messed up over here. Anyways, okay. Yo, Mike, Jeff, Colin, Lucas, Rob, what's going on? I woke up a little stuffed. I think it's allergies. Hopefully. Daddy wants new spy lows today. Renji, Philip, Richard. Good morning. Aaron, Corona's here in Michigan now, just so happens to be the most populous counties too. We've had it in Illinois here. Yo, Daniel, we live. Anyways, all right. So we got the S&P's down 97, Dow's down 803, Nasdaq down 251. I mean, what did you what did you expect? I mean, those huge rips. I mean, we had a lot of two-sided action yesterday. We had a huge rip on the S&P from 2760 all the way up to 2880. You know, bears were getting destroyed. Bulls were celebrating, but you know how it goes. I actually closed out, so I was actually short the S&P futures. I was short ES. I was short 2800, 2805, and I closed it out this morning. Let me just pull this up. So I had two contracts. Let me just pull this up. I had two contracts. The first contract I got 270 credit for. The second contract spread I got 330 credit for because I averaged down. So I averaged this down yesterday into the close. I put this on the night before, and then yesterday at close, I averaged down at 330. And I just closed out for a 245 debit. So we didn't make a lot. Like we only made $55 on that spread. However, I was in the hole on that spread when we got pushed up here. When we pushed up to 2880, we were at resistance. If it went to 2900, you can see this alert I set last night. 2902, I set my alert. Never trigger. If it hit 2902, I was gonna take the spread off and just say, okay, forget it. The Bulls won this one. We're going to come back tomorrow and try again. But thankfully, averaging down and coming back into here, I mean, obviously, it closed a little too early. I closed it out this morning at 7:07, so about an hour ago. So we were right at 2780 area, 2790, and now it's dropped down to 2770, 2760. So I just wanted to take profits because I do have a meeting this morning, so I don't want to be fighting. Also, those contracts expire today, so I don't want to have to battle any rip-ups at open. I already won. When a trade goes against you and comes back around, that's a gift, so take it and leave. You could always re-enter, So that's kind of my plan right now. I'm looking at two-sided action. Ford is releasing a new Ford Bronco 2021. You think that will raise its stock? I don't know. Ford's in trouble. So the thing about Ford and GM is they met a point of saturation. Right now they're just fulfilling demand. They're not necessarily growing. So they're just fulfilling demand. I'm still calling put season. Yeah, people were like, "Hey, why are you shorting? The Fed's gonna save us. The Fed is pumping in 200 billion for the next 2 weeks every day. Are you gonna stay short?" I said, "Yes, I am gonna stay short. I will stay short for the foreseeable future, unless things turn around." And the other thing is, these issues that we're having in the market are not new issues. So if you've been following the market for the past couple years, these are not new issues. The Fed has just been pumping so much money into the market that we're kind of like putting lipstick on a pig. You know, we're going up. Hey, we're at all-time highs at the same time the Fed is cutting rates. You know, it's like, you know, you gotta kind of read what's going on a little bit, and you know, we're at kind of put two and two together. It's like, hey, why is the Fed getting nervous to cut rates when we're at all-time highs? Like, why in the world would they do that? They have a reason. They didn't tell us the reason. They just do it, you know? And then you guys remember when they were unwinding the balance sheet, and unwinding the balance sheet crashed the market? You know, it's like if we're that fragile, something really bad is going to happen eventually. I'm not saying it's happening now. Could. I don't know. Well, we can go a lot lower. You know, Aaron and Richard, NYC is a ghost town. Despite looking like October 2018. Market is screwed. Ariana Lyon, Mr. Morris, what's going on? They need to do an OJ Bronco version. I think that the OJ Bronco version would probably be, not, I mean, it might be popular, but I don't think they want that attached to them anymore. Oil is down a little bit too. I actually still short this. I do have 36 days on this debit spread. I was up on it like 70, 80 bucks, and now I'm back near to break even. Oil rallied pretty hard yesterday. You know, it was up like what, $3 yesterday. Now it's dropped another $1. So I'm looking for sub 30. Yeah, this ripped up yesterday. You know, it hit 30, it ripped up to 35, hit 36 overnight, and now it's down to 33. So it's gonna be wild. Yo, Damon, what's going on? If you're here right now, say what up. Do me the favor, hit the like button. It's free. I appreciate it. Helps me out. The reason why, when we kind of saw this coming, the reason why the market is down, they say, is, you know, Trump said there's going to be some 0% payroll tax and some other stimulus and stuff like that. Everyone was like saying, WTF, I don't know what's going on. We don't know when this is going to happen. And the uncertainty is what's driving this. You know, in my opinion, I think it would be better off if Trump didn't say that there's going to be anything, because now people are going to be looking for it, and now if we don't get it, we're going to be kind of worse off than where we were before. You know what I mean? Yo, Keith, what's going on? So that is kind of the issue. They also said that, you know, Trump also said, you know, Trump says a lot of things. We don't know if it actually is going to come into fruition into like a policy or something. He said he's going to provide funding to, you know, some of the oil companies and stuff like that are U.S. based. I don't know. We don't know what that means. I feel like sometimes he just gets on the podium and starts rambling and talking about what he wants to do, even if it's not necessarily possible or probable. You know, so that's one issue. Hey y'all, what's going on? Second day here. Robert, what's up? Anyone has puts on cat? Man, I think the allergies are kicking me this morning. I gotta start taking allergies. It's about to be allergy season here. I didn't start to get allergies till I was like, I don't know, 28 or something. It was weird. Also, Goldman Sachs actually said this is the end of the bull market. They actually said we peaked, you know. So they said after 11 years, 13% annualized earnings growth and 16% earnings throughout its peak appreciation, we believe the S&P 500 bull market will soon end. Investors will cut their equity positions in recent weeks, have cut their equity positions in recent weeks, but not to levels reached at the trough of other major corrections in this life cycle. The stock strategist slashed his mid-year S&P 500 forecast to 2450, meaning the bank now sees the market falling another 15% beyond Tuesday's close to levels not seen since December 2018. That is, the bank now sees the market down another 15% on top of the 14% that we've already lost this month. So, kind of interesting. Goldman Sachs analyst, 2450 target. Hold on one second. Sorry, guys. What's going on? OMG, Danny. So, I was saying on SPY yesterday, target was 275. We hit that target on SPY. We actually went down to 273 yesterday, 274 area. Today we're back at 278 with a 275 target. Let's see if we break through or not. We're gonna see if we're gonna bounce here. If right now anything could happen. We're back down at SPY where we bounced yesterday. So just be cautious. You don't want to just because you don't want to just start shorting out crazy, especially when we have a huge gap down and knowing that yesterday in this area we bounced pretty hard. So just be mindful. Bulls still can come at it. When we have a gap down, I usually kind of just chill for the first 30 minutes, an hour, kind of see where things are at, get a feel, see if any ranges are created, if there's any tops or bottoms created, and start putting on some trades that way. So for me right now, I don't necessarily have a trade that I'm looking at. There's price levels that I'm looking at, like SPY 275. I'm also eyeing Apple, the lower 260 area, like 265, 262 area. It did pop up to 288. What was it? Yeah, it was 280. Was it 288 yesterday? No, 286. It did pop up to 286 after 285. We closed at 285.34. Now we're down 276. I really wanted to short Apple yesterday into close, but I wasn't. Based on the strength, if you're looking at the weekly chart, you could have said, okay, we had a bottom here at 262, right? You could have said, hey, on the weekly intraday, we had a bottom at 262. We just made a higher low here. Tomorrow, we could be above 290, which is making another higher low. So that's kind of what I was thinking is like, okay, they pushed it pretty hard into close. I'm already short the S&Ps. I don't need to take any more risk because I also have to have some meetings tomorrow morning. But I do wish I shorted Apple. I was looking to short it, but I didn't know how aggressive I wanted to be if that was the case. If we're starting to make a rebound here, but it appears that we're not. However, it could revisit 270 and bounce, but I'm looking at the 260 area on Apple. So this is what I'm on the 1 year. This is what I'm looking at right here, 260, 262. If some sort of support up in here, even though there's not a whole lot of support, it's bounced quite a bit the last few weeks in this area, so I'm looking to revisit that area right now. So if we show some weakness, I'm looking to probably short Apple. Would be probably my top play. Go Tracy J Crapper, first time here. Good morning. Ford puts making the killing. Yeah, I mean, if we're in a true bear market / recession, puts are going to be paying out for the foreseeable future. You just have to really be careful about these shakeouts. These rips shake you out to your core. So you have to have realistic expectations going into it. Use proper stops and know that they're going to try to shake you out. They're going to try to shake you out of those puts like they did yesterday. Thankfully, they didn't shake me out of my futures contracts. But, if you're paying, and also the other thing I want to say is because of contracts yesterday for 50 delta on a weekly expiration. I don't even think it was 50 delta. I was paying, what was it yesterday? Let's see here. On Apple. So I think it was like 45 delta even. Let's see here. I was looking at a strangle yesterday. Yeah, it's let's see here. I was looking at the puts yesterday, so we closed at 285. So I guess it was like 50 delta. 50 delta yesterday on the puts I was buying. You can see here yesterday at Apple, they were costing 742, 728. So these were costing $700 a pop for weekly expiration, like 40 delta. So, it was options are pricey right now. So that will also, like, if you have a smaller account, I actually made a video about this, trading options right now with a small account with options pricing being this expensive. So if you have a small account and you're paying $500, $800 a contract, like I was paying yesterday, and they rip it like this against you. Like if we look, I had what did I have yesterday? I had the 277.50 puts. Let's look those up. 277.50 puts. These closed at $4 yesterday. You know, I bought these around $7. They peaked at around $12. I sold in here. I bought in here, sold in here, and they peaked up at 12. So I sold them for what, $9 yesterday. So I bought them for around 7 and sold them around 9. You know, so if those end of the day rips, you can see how the end of the day rips. This was going for $10. This end of the day rip brought this contract down 50% within an hour. Within an hour. You know, in the last 30 minutes of market close, you had it going from 735 to 447 a contract. So if you have a small account, you're thinking to yourself, man, I just blew 50% of my account in an hour. You know, so that's why you got to be mindful when you have a small account and you're trading 50 delta, 40 delta, and you're paying $7, $5 a contract, and we get these rips, they're going to try to shake you out, all right. You know, they want that money. So you have to either, if you believe in the trade with good analysis and you believe in the trade, like I did with my S&P contracts, you'll hold on. But you also risk, like I was saying, you also risk going to zero like that. So you want to be very careful. So this is where you get in trouble. With a small account, I definitely recommend going more with debit spreads or credit spreads, like credit call spreads, placing a credit call spread up in here, or buying a debit put spread. You'll probably get your most bang for your buck right now, you know. But with the volatility is where men are made. men are made, balls are dropped, and some get cut off. Some get cut off. Just remember that. Oh, I remember using my full account to buy one option. Those were the days. Yeah, if you're one trade away from not being able to trade tomorrow, you shouldn't put that trade on. You know. Renji, Microsoft, yeah, I got you. Manny, what's going on? Might have another red day, but be mindful with the ranges. VIX is at 54, so we can see go back up to green, go back to red. So like yesterday, Dow gapped up 900 points. We went into negative, and then we closed up 1,000 points. So just be mindful that anything can happen for the bulls or for the bears. The good news is two-sided action is going to allow you to take advantage of both ways. You know, if you're a bull, you got paid yesterday. If you're a bear, you got paid yesterday. The only time you didn't get paid yesterday is if you're a bull or a bear and you didn't exit your positions when you were supposed to, because that's where you get messed up. Take your profits, take your profits, take your profits. You know, I can't stress that enough. Yesterday I took my profits. Yes, I left some money on the table, but at the end of the day, I was stress-free living the rest of the day. I made a little bit of money in the morning and I left. You know, I was done. Microsoft right now, you know, Microsoft, I'm guessing it's going to probably revisit the lower 150s. You know, it's at 157. You know, similar to Apple in this area of consolidation, coming back to 150, I think would be healthy. You know, this rip up to 190. You know, I think for Microsoft was the most undervalued stock in the bull run that we had in 2019. You know, because it basically stayed the same. You know, this was the same price for basically 5 months. It took 5 months of consolidation. You know, strong support though. It built very, very, very strong support for Microsoft in the 140 area. If it breaks the 140 area, I would be very concerned with Microsoft, because we're probably going to 100 after that on Microsoft. I'm bullish Microsoft. I think they're a great company, but you have to follow the price action, you know, and that's exactly what I plan on doing. So for Microsoft, I'm looking forward to revisit the lower 150s. If it breaks that, I'm looking to revisit this area of pretty strong support. It built a 4-month area of support here around the 140s, 135 area. If it cuts through that, you know, we're going to 100. You know, all these trillion dollar valuations are gonna be a thing of the past here. You know, it's just insane. You know, I wish that I was able to trade the tech bubble of the 99 and 2000. That must have been like we think this is crazy. That must have been just insanity, where left and right you have all these multi-million dollar IPO valuations, unicorns, whatever you want to call them, highly in debt, not making any money, and there's thousands of them, and they just keep going up, and they keep going up 1,000% in the stock market, 100%, 500%, and then the bomb goes off and everyone gets wrecked. Everyone goes out of business. I mean, it's like, I wonder what that was like. I don't know if anybody here trade that. I don't know if anyone here has that experience, man. But I wish that I had that experience. But the good news is we're experiencing this now. We're experiencing possibly, I'm not going to say it is because anything can happen, possibly the end of an extremely long, the longest bull run in U.S. history. Yo, J Cam, what's up? We're experiencing possibly the end of the longest bull run in history, and we're getting a little bit of rotation here. 27 crypto bubble was kind of similar. Yeah, Colin, I agree with that. It's like, oh man, Coinbase lets you take your credit card and deposit funds. What's better than that? Coinbase. Okay, let me max out these credit cards because I'm gonna make it all back on overnight on these ICOs. You know, on these, I'm gonna make it all back on Ripple. I'm gonna make it all back on. You know what I mean? Like, oh crap, that company, that exchange went under. It got hacked. I lost all my funds. Sucked. You know? Yo, Slick, what's going on? Trevor, how we doing? Yeah, I mean that was yeah. I guess you could. You're right, Colin. Like the crypto craze in 2017 was probably very similar to what the .com boom bust was. But what we have learned from the charts though is every great drop had that one final leg that pushed it up to the edge and kicked it over. And is that what this is? Like if you're looking at the S&P and we look at the last 4 months, like was this the final push up and it just couldn't take it anymore? Was this it? Was this the final leg right here? Because if you remember, if you look here, it took, what's interesting, if you look at Microsoft, and I've done this, if we go back, let's go back in time, okay? So they hit a high of 190. Now, if we go back to, let's see here, 90, that's 2001. Okay, so they hit, that's 2001. Hold on, let's go back a little bit more. Okay, so in 99, 2000, they hit a high. So you can see here, they hit a high. This was crazy. They hit a high of $60 a share back in 99, 2000. This was the final leg. It went from 45 up to 60, and then it was downhill from there, right? So this is what I'm talking about, like the final leg from Microsoft. So this hit up 45, pushed up to 60, and then it was all downhill from there. This was 1999, 2000. Microsoft didn't hit $60 a share again until 2015, 2016. So 2015. So it took Microsoft 16 years to recover from the tech bust, the .com boom, the .com bust, whatever you want to call it. It took them 16 years to get. So my question is, if this is the top, how many years is it going to take? What kind of drop are we getting for? And how many years is it going to take for a company like Microsoft to revisit this high? It took Microsoft 16 years from 2000 to 2016, 2015 area, 1999, 2000. When the market bombed, it took them 16 years to revisit that high. So if this is the high for Microsoft, let's call it 190, and we drop down to 80, 90 area, how long is it going to take Microsoft to get back up to 190? So, recession was confirmed on Monday. We'll see. What I want to know, I mean, we're gonna have some really bad reports coming out next quarter and next month. April reports are gonna have the March data. It's gonna be horrendous. Microsoft has Azure, but totally agree. I mean, they also have Office 365, which is killer, but I don't, I mean, that's what you got to be worried about right now is if this is the top. Are we in for another 10-year ride of trying to climb back up to these highs? Or if that's the case, we're in for some doom and gloom. We're coming back down to $70, $80 a share, and we're going to be riding slow for a long time. Yeah, big factors all adding up. Trade war, politics, price war, beer, virus, debt, margin calls, election year as well. Do you think stock will react to the bad earnings? I do think they will. I think if you have good earnings, they're not gonna give you a bump. But if you have bad earnings, you're gonna get double penalized. So it's a down market already, and you're having bad earnings, so you're gonna get the double whammy. It's not fair, but that's life. And then if they have good earnings, they most likely will be flat, kind of like Costco. If you have good earnings, most likely will be flat. You see like Costco the other day, good earnings, flat, rip down a little bit, try to come back up. Man, this Costco, I'm not trading these illiquid options though, but Costco would have been a great short here, 310 to 300 this morning. Let's see here, 310. What were the 300s? Yeah, see the problem is with Costco is there's some open interest here, but when we get into fast markets like this, you want to trade highly liquid options, and these are not like bid ask $4, $5 wide, $1.50 wide contracts. Bid ask, that sucks. In a slow market, the bull market, we could take some chances on some contracts like that, but in today's market, we really can't take a chance on these bid ask spreads. I mean, we really can't. It sucks. How do you know if it's liquid? Based on volume and also how tight. Based on the volume here, there's no volume right now because the market's closed, but based on the bid ask spread, so the tighter the spread. So if you look at these are like $1 wide. If we go to Apple, you'll see that these are only like 30 cents. The market's closed. These are actually at the bottom here. If we go closer to the bid ask here, these are $1 as well, but these were in the money. So it's rough. These option prices, maybe Costco will tighten up. Maybe Costco will tighten up at open because Apple looks a little wider here as well. But it's probably these puts are probably wide because of this. The option market wasn't pricing it right due to this enormous run at the end of the day. Probably similar to Costco, but Costco is more likely to screw you in the bid ask than Apple or SPY. So if we go to SPY here, SPY you have 20 cent, which 20 cent bid ask on SPY is pretty wide. You used to be able to get a penny to 5 cents at the most, and now it's like, okay, we'll try to hit a 20 cent bid ask. Like it's crazy. All right, market opens in about 2 minutes. How long have I been trading options? So close to, let's see here, close to 4 years, almost 5 years now. Feels like it's been longer, but prior to that, I mean, I was trading mostly stocks. Prior to options, I was trading penny stocks. Every new trader has to discover who they are. There's a lot of products. There's stocks, there's penny stocks, there's futures, there's forex, there's options, and you have to go with what you think is best for you, what product works best for you. Everyone's risk reward ratio is all different. Options seem to do it for me, so that's why I gravitated toward options, and my success rate with options is a lot higher than like just buying stock, shorting stock, penny stocks, and I enjoy the risk to reward ratio and the thrill. I'll be honest with you. What level? I'm looking for the lower like 265 area on Apple. I'm not sure we're gonna get it. We'll see. We got to crack 270 first on Apple. If we can crack 270, I'm looking for the lower, like 262, 265 area. Not sure we're gonna get it today, but that's what I'm looking for. Trevor, yeah, we did cover that. The Goldman Sachs, we did cover that this morning as well. They're saying the bull market's gonna end soon. JetBlue, JetBlue, yeah, they're screwed. JetBlue, I mean, they're getting pummeled. I actually saw, what was it in the news this morning, that I mean, JetBlue. I mean, I would be cautious of any travel stocks right now. JetBlue, they're saying we're planning for it to get worse. We don't think bookings have stabilized yet. They have a more of a drop in demand than after 9/11, which is just insane to me. People were scared to fly because they didn't want their, I don't know if I could say it on stream, but you know what I'm trying to say. I don't want, YouTube gets a little weird with things that you say, like with that type of stuff. So I'm going to kind of avoid that. But 9/11, they're saying bookings have dropped more than after 9/11 right now due to coronavirus. So I don't even know if I can say coronavirus, but I don't care. People need to people need to know. Can't limit my speech. So long enough to make money at it, right? Yeah. So I think that this is just the start for the travel. I think these prices are gonna get cut even more. You know, they've reached a, now that we're at a multi-year low here, next stop is like $10. Next stop easily $10 for JetBlue. So just be careful. All right, markets are open. All right, let's see here. All right, so we're opening up. S&P is down 70, Dow's down 611, Nasdaq down 181. So VIX is at 52 right now. Pretty interesting. Oil's down $1. I took my profits already, so I got a meeting to get to, and then I'll be back on looking to stream, trade, not stream. I'll be trading. I'll be in the Discord. If you want to find me, hit me up on Discord. Hit me up on Facebook. As always, stay safe, stay green. It's us for cert.